shortly it will be August 14th, 2020. And this is of course the video log that takes 30,000 to 1,000,000. Now, I want to show you today some of my research, some of the options, some of my choices when it comes to getting into real estate, which has been my goal and my point of research in the past few days. And I'm going to do a brief overview of what I found and how I'm getting into it by selling. I'm going to be selling put options to try to accumulate some of these positions, and I have no idea how long I'm gonna be holding them. But I'll review the choices and tell you some of the brief stats of what I've been looking at, and I have looked at their financial statements on at least a couple of the companies, so I have kind of an idea of what's going on. But I think I will be pulling the trigger on one of these companies. I'll show you which one in a minute. But first, let's go through the account. I'm sitting at an all-time high, and that is a $115,707. I hit an intraday high of $116,608, and a record close and a record intraday high, mostly because of, well, Apple did well, but well, first let me fix this to today's return because I like to view it that way. It's much more informative to see what positions contributing how much to the rise of the account. So what I'm going to do is I'll quickly run through the positions. You can always pause the video and look at the symbol and then look at the price, strike price of the option here, whether it's a call or put, expiration date, number of contracts, and whether it's a sell or a buy. And you can then deduct all relevant information about my positions. So I'm going to quickly run through them, and you can see how much they decreased or increased in value today, and how much they contributed or detracted from the day's gain. So there we go. The Apple one is, of course, still roaring. This 300 call has been one of the best investments. Well, not investments, but one of the best bets that I've made. My Apple position has been one of my greatest investments when it comes to just total amount of money. But wheat and precious metals has been probably one of the shining stars as well. And the biggest percentage investment is something that I've already exited out of, at least in this account, which is Newmont Mining. If you can see the percentages here, it's almost 300% gain. Because I bought at the lows back in 2015 December. But I have more Newmont Mining in a different account, so don't feel bad for me. Okay, now I've run through the account. I hate when it switches like that. I don't know why it does it. So, oops. I'm running through the stocks now. These are the positions. Realty income went down a little bit, which is kind of good for me. I want to acquire more. There's Wheaton Precious Metals with another $103 today. And we got the uranium sitting pretty flat, uranium related stocks, and Visa, etc. If you want to see the account tab, this is what it looks like. The cash, options and stocks, 102,701. But of course, I'm using some leverage. So that's not factoring that in. And here we go, Apple, large position, 34,000, Cameco, and then O, Energy Fuels, DEM, SBRAV, Main, etc. All right, that's it. That's the account. If you have any questions about the account or any positions, feel free to shoot me a comment, and maybe I can go over some position in detail if you're interested, and the reasoning and why I got into it, etc. So that's up to you. Okay, moving on. Commercial real estate. So I've been wanting to get into some real estate associated tickers, but having trouble finding ones that I really like. One of them was O, Realty Income, which I really like. The other ones I found that I may be getting into is American House for Rent, but it seems like they have a really low return on investment, return on equity, return on asset, right? So I'm kind of hesitant to get into it. I don't know exactly how their operation's going. They shouldn't be taking that big of a hit through these times, so I'm not sure if it's the right place for me to be on. But it's the only company. It's called American Homes for Rent with a 4. But I'm just not sure if I want to put my money in there. It's the only publicly traded company that I found that exclusively focuses on owning residential homes, like single family, etc., and renting them out. So we'll see how it goes. All right, back to the browser. The company that I have decided to try to play around is Simon Property Group. Now, this is a very risky play. This is what the chart looks like right now. I'm using FinViz because it gives me a little overview, a more detailed overview of some of their, numbers, some of their ratios, etc. You can see it's been struggling here. It hit rock bottom somewhere here around 41 or 40, something like that. Now it's sitting at around 66, but it has been as high as 200 something. So it's definitely down from its highs. Now, these guys own, I think, I believe, like malls and things like that. So they're not looking good, right? Their business is not in a very good spot right now. Nobody's going to the malls, etc. I think they just bought out Brooks Brothers. So, I mean, they're trying to make some kind of moves, but just looking at the statistics is going to become apparent what it's looking like. And so let's go to it now. You probably can't see here on the left. Let me see if you can see. Yeah, you can't see their income, but income's $2 billion and their market cap is $20 billion. So that puts them at a P at around 10, which is great. And the expected P is going to be around there as well, which is also good. And then we go into some other statistics and information. One thing I really like to look at here is the payout ratio as well. So they have 129 payout ratio, which is extremely high and unsustainable. REITs in general are supposed to pay out like 90% ratio anyway, but when it gets too high, that means they're gonna have to do some kind of adjustments. Maybe take on some additional debt or what have you. So it's not necessarily a great thing. The ROA, ROE, and ROI, return on asset, equity, and investment, looks really good actually from the snapshot. Of course, this doesn't tell the whole story. There's more to the story than just the numbers, but it's a really good launching point if you want to just get a quick overview of a certain company. And then the margins are really high. The operating margins, profit, gross margins are really high on these companies. So that's something to look at too. And I really like it because of its price to earnings. I mean, it's a really undervalued company if things return to something close to normal, which they might not for a long time. But Simon Property Group, I think, is one of those companies that's going to stay around the same level for a long time now. And I might get a really good value out of it by selling put options and call options around it. It's going to be my next Cameco, right? If you remember Cameco, let's go to Cameco real quick. I've made a ton of money on Cameco. I tried to calculate it the other day and I failed calculating because it's just so many options around it. But it's been sitting around this $10, $10, $11 level for like the last literally over 5 years. Look at this, right? So imagine how much, and if you go some of my first videos, you'll see that I've been selling puts and calls against this position for a very long time, against this company, and it's worked out very well so far. So I've collected a ton of premium, maybe in the thousands of dollars worth of premium. Oops, skipping ahead. Okay, so back to Simon Property Group. This is what their numbers look like, right? So you can see 6%, 76, 10%, PE of 10. Mostly institutional owned, but these are kind of the numbers that I care about, right? And payout ratio. Dividend is 7.88%, so they're probably going to have to cut that a little bit. And then just to look at the competition, this is Prologis or Prologis. I don't know how to pronounce that. If you know how to pronounce, let me know. And you can see how it's recovered really nicely off the bottom here. I think this is the company that actually rents out warehouse space to Amazon, so I can't imagine them doing badly at all. If I'm mistaken, correct me. So the market cap is 75 billion, so it's for like almost four times the size of Simon Property Group. Income 2 billion, which puts it at 40 price to earnings ratio, which is really high. Okay, in other words, it will take you 40 years with the current income to make up your initial investment, which is an extremely long time. So that's not very attractive to me. And you can see here the ROA, ROE, and ROI looks great. It's low numbers, but it's positive. And then the margins are astronomical as well, which is great. The payout ratio is only 86%, which is right in line for that REIT requirement. So that's also great. And the dividend falls under 2.26%. So there we go. Almost all institutional owned, 98.7%. Not a lot of retailers are picking up these guys. Okay, so next one is Duke Realty Corporation, just so we can get a feel here for the numbers. This is the graph. It's near an all-time high, sitting around just below $40. I don't know if it's an all-time high, but since February, let's say. And it's a $14.3 billion company, 371 million in revenue in income, and which puts the ratio at 38.21, which is also very high. And you can see its numbers look even better than Prologis. Payout is about 90%, which is in line. Then we have 99.8 institution owned. It's been performing well recently. So, but very high, right? It's not very underpriced. All these are, I would argue, like overpriced relative to what they're bringing in. The bet, of course, is that income line is gonna be multiplied if things go back to somewhat normal. Okay, or if things don't, maybe Prologis will go up. Here is what is this one? The Federal Realty Investment Corporation. It's about a $6 billion company, PE 23. And then here are the numbers that I care about: the ROA, ROE, ROI, and margins. All right, so they're doing really well. Return on investment is like almost 12% here. Margins are all 30% plus. This one's 66, 40, 46. Doing great. Payout is 117, so they have a little cash shortfall in the short run for the dividends. Dividends sitting at 5.11. So this isn't actually a bad bet either, but I think Simon Property Group's better. I have to find out more about this company in order to figure out what they invest in, so I know if I'm safe, if I'm gonna start selling puts against it, right? And here, of course, is the what did we do? Duke? Yeah, we did. Then Realty Income is one of my favorites. It hasn't fully recovered to an all-time near those high February highs. And it has the highest PE here, which is 42. It's a $21 billion company market capitalization, and earning an income of $500 million. All right. And the payout ratio is 188%. So they're running into a little bit of trouble, I think. Here are the numbers. They're fairly low, but look at these margins. Gross margin is 93%. It's crazy. But anyway, I really like it because they're very stable, and the last thing they want to do is cut their dividend. So they really don't want to cut their dividend. They have a really strong history of increasing their dividend very steadily over the years. And if they don't, with the rest of the money, if they have leftover money, they'll just invest in new projects, etc., and they'll just grow their business. So it's a really interesting proposition here. The dividend is sitting at 4.56% at the moment, and institutional own only 76% compared to the other REITs. So it's a retail favorite, this one. And of course I own it as well. So, but I'm looking to diversify a little bit within my corporate real estate investments. And that's it. And here's Simon again. You can also see the recommendations here are very heavy for realty income. Everybody's either a buyer or an overweight. Like Morgan Stanley, Wells for all these banks, right? Berenberg. Citigroup had a one downgrade to a neutral back in April 2020. These are recent. Down at the bottom, Deutsche Bank upgraded from hold to a buy, quoting it's going to go up to $66, and it has done that. It's 61 at the moment, 61 and a half, so it's pretty close. So Deutsche Bank, a bank that's in trouble itself, is giving recommendations about other companies, but they're turning out correct. And it surpassed Morgan Stanley's expectations of going to $60. We're just waiting for Berenberg's expectation of 70. Royalty income, great. Let's see, Simon Group is not as favorable, although the two more recent recommendations by Compass Point, I've never heard of them, and Goldman Sachs, I believe, Goldman, are quoting a price target of 94 and 120. So these are the most recent guesses, right? And the stock's sitting at 66. So they're thinking that it should double from here. I mean, I'm not so certain. I think I'm a bit more pessimistic than these companies, but even if it stays around this level, around 66 to 70, I'm going to be happy, right? Because I'm going to be collecting maybe a dividend, and I'm going to be collecting premium. And that's one thing that I wanted to mention, is that the premium is actually pretty fat. All right, so let's go to the Robinhood side here and look up SPG, Salmon Property Group. So if we go to the options menu, you can see I already have one put sold. Let's first, of course, as always, pick a date. So how about the September 18th contracts? Price currently 66, so I'd be happy if I bought around 60 or 55. And look at what's going on here. So if I try to sell a put, I've already sold a put for $50 not too long ago, but that's giving me $50 of premium that I can be collecting. But if I sell a $55 put, that would be $112, and a $60 put would be double that, $224, which is, I'm not opposed to doing that. So I would have to commit $600, right? $600, I'm sorry, not six, what am I talking about? I was thinking about something else. $6,000 worth of collateral. So if I have $6,000 in cash, I can get $224 worth of premium by September 18th. Okay, so that's, what is that? A little bit more than a month from now. So in 1 month, I can be getting that amount of money. I mean, that's really good. That's like 4% per month, roughly. If I'm just doing a really rough estimation of what the return is. 4% on your capital for a month. I mean, if you annualize that, that's what, 48? What is that? 48? 48% annually. If you keep doing this deal over and over and over again, if you can find it. Of course, once I enter the position, if it drops below 60, then I'll have to sell a call against that position, which will be less, right? It's going to be less premium. Calls are usually a lot less expensive than puts. All right, so that's the plan, and that's how I plan to get into this position. I've already started that process, but in general, I'm just looking to get into some more real estate here. I think it's a little bit undervalued, especially the real estate for commercial use, and but I'm also really interested in home investments. If you know anything besides American Homes for Rent, any other company that focuses on, renting out like townhouses or homes or single family or duplexes or something like that for tenants, then please let me know what company that is so I can look at it as well. I just haven't been able to find anything else. Well, I hope you guys got some value out of this. I just want to share what I'm doing right now, and obviously share my own all-time record when it comes to the value of this account, and log that in, because maybe in case you didn't know, like that's actually the original purpose of this log, is so I can keep track. Well, one, I can keep myself accountable and always active in the account, and I can track my progress on my way to $1 million, and also wanted to make it public for verification purposes, and I hope it doesn't detract the fact that it's on Robinhood. I hope it doesn't detract from the fact that I'm making gains, but I really like that platform. I mean, I have an interactive brokers platform. I'm sorry, block the screen, block the video there for a moment. I have interactive brokers. I have E-Trade. I used to use Share Builder as well back in the day, before E-Trade bought them out. I mean, I have other platforms, and I just like Robinhood so much, right? It's just so clean, it's so nice, and I was gonna say option wheel. The option menu is really intuitive and clean. So when I'm flipping on my phone, doing brief research and just to see where the contracts are at, I have a lot more fun doing it, and I think that's the secret there, and that's why I do it. On top of that, if for some reason, some of the positions, especially option positions on Robinhood, seem a little bit more liquid than interactive brokers. Like there's a few positions I try to enter, they should be the same, but for some reason it just seems more liquid. Like that would be surprising, right? Because Robinhood is slower than some of the other brokers, and they sell their order flow right to other companies. But for some odd reason, like if I enter a limit trade, it actually has a higher chance of executing for a better price on Robinhood than other brokerages. So that was very surprising for me to find out. So in my opinion, it's actually more pro, okay, to use Robinhood in that respect than some of the other brokerages. Now, I might be talking out of my ass. So if you think so, I'm glad to hear your arguments down below so we can try to get to the bottom of this and get to the best platforms available. But that's just kind of the observation from the field that I'm getting, right? I mean, I'm operating in stocks and things like that every day, so I just get a feel for it. So if you think I'm missing something, then I'd love to hear about it. Okay, well, that's all I wanted to say for today. So I think I'm gonna call it. I'll probably make another video on Monday as always, and I'll let you know my progress with SBG. All right, I think that's it for now. Peace out.